Happy New Year, everyone. I wasn't expecting to make this video, but Christmas came a day early and Alibaba dropped over 15% on Christmas Eve. Yes, that is right. I'm happy about this price crash. But why did it happen? So let's go into the details with what happened and how it changes the entire investment thesis. Now, for those of you who are new, a big welcome to my channel. My videos about investments that anyone in the world can make. I mostly talk about public companies that we can all buy shares in, but sometimes I talk about other investing related topics as well. I'm a full-time investor with a decade of investing experience, and I have built a reasonable sized investment portfolio that I'm aiming to continue to grow at 20% per year. One day I actually want to start an investment fund, but until then I'm trying to help as many people as possible understand what they're actually investing in. Most people spend more time researching their next computer or their phone than they do their next investment. I base a lot of my knowledge on the great investors, Peter Lynch, Warren Buffett, Charlie Munger, Monish Pabrai, and a handful of others. Okay, let's now talk about Alibaba, and at the end of this video, I'll give you my opinion, but first, let's work out what went down on the night before Christmas. Firstly, I am obviously not a lawyer. This is not advice, nor do I have any information outside of news articles. So pretty much don't take my advice and think for yourself. Agreed? All right, sweet, let's go on. The Chinese government has started an antitrust investigation into Alibaba. That pretty much means that the Chinese government is annoyed that Alibaba is so dominant. Ant Financial Group, which is the finance segment of Alibaba, also has to appear before the government's banking regulators. Honestly, not much has been revealed about exactly what the investigation is going to be about, but we can probably take a solid educated guess. So let's unpack this a little. Now, there probably is a bit of bullying going on by Alibaba considering they are so dominant. For example, if a supplier of dog leashes is annoyed at Alibaba's fees, well, if they leave, Alibaba really won't care at all. Where are they going to go and sell their dog leashes? They will stay with Alibaba because no one has the network effect like them. Chinese suppliers rely heavily on Alibaba, and therefore Alibaba holds the power. When you are a monopoly, well, governments just don't like that at all. It's pretty much the same as Amazon in the US. Amazon has been tightening the screws on their suppliers for years now. And I have no idea the extent of the issues inside of Alibaba, but it's probably a good thing that they are going to have to open up a bit on their policies. Do I think any of this is detrimental to the long-term business of Alibaba? Well, very unlikely in my opinion. I think it's unlikely because the same thing has actually been happening in the US for years. Just recently even, the Department of Justice in the US on the 19th of October, they filed lawsuits against Alphabet, accusing them of operating an illegal monopoly. Is it a monopoly when you are the best and everyone uses your products? Well, yes, but that's also good business. Okay, Alphabet probably has a few things to pay fines for and straighten up, but that's part of the deal when you have so much power and money. Now on December the 9th, Facebook was hit with similar lawsuits. Facebook, Amazon, and Google have been getting summoned by lawmakers now for years. We have all seen Mark Zuckerberg defend his company in relatively funny YouTube videos. Now, I'm not defending the actions completely of the tech giants in the US. They might be taking advantage of smaller players, and I'm okay with an investigation or two. A few fines here and there as well isn't a big deal. It helps make sure the competitive forces in the economy stay fair. Now, the stock market didn't care about the Alphabet and Facebook stories, but when pretty much the same thing happened to Alibaba, well, everyone has freaked out. Now, Ant Financial has a little more work to do with the Chinese government. They have spread into insurance, advice, and other segments that do need tight regulations. It actually reminds me of what happened in Australia over the past few years in the banking sector. Australian banks were giving financial advice that would push people into more of the bank's products, regardless of whether that was the best for the customer. It was bad behavior and it needed to be fixed. So I am on board with this type of investigation to make sure Ant Financial is doing the right thing by the customer. It will take some time and there will be fines and changes that need to be made, and I can nearly guarantee that. But look, let's take a breath and think about this long term. So there is a chance that the Chinese government does something crazy and tries to seriously control Alibaba. It is possible. And for that, we need to understand the risk has slightly increased. So don't go investing your life savings into the company or anything crazy like that. But what I think is the more likely scenario is that this drags out for a year or two. Alibaba pays a few fines here and there, which will be very small relatively to the cash flow that the company is generating. Alibaba will cooperate with the government with agreements and measures being reached, It'll all be pretty boring to follow and the stock market will soon forget. The media might try to smear Alibaba, but it won't be that interesting. The Chinese government and Alibaba have too much reputation at stake to let this turn into a circus. Now, 2020 has been a strange year, of course. The shift to online shopping has accelerated dramatically, and Alibaba is a massive beneficiary of this shift. Alibaba has a massive e-commerce lead against the competition in China. They also still have the entire ecosystem dialed in for the Chinese consumer. Let's say someone buys a kettle from Taobao and then they pay with Alipay. The seller buys more inventory then from 1688.com and makes the purchase with Alipay again. The seller can list on AliExpress to ship worldwide, and the seller can get financing through Ant Financial. All steps here covered by Alibaba, and this hasn't changed. China is a massive market and AliExpress is growing throughout the world. Alibaba is investing a lot into their future through movie studios, other e-commerce platforms in international markets, shipping and logistics companies, and many more. And definitely don't forget that their financials are very solid and they've been growing at 30% for the last 5 years, which is very fast. And although that might slow a little in the longer term, it has actually accelerated dramatically in 2020, which will just be a monster year. Something that a lot of people were very quick to dismiss was the unbelievable success of Singles Day, which is Alibaba's equivalent to Amazon Prime Day. Okay, this year, the Singles Day event was dragged out actually over 10 days, but if you compare just Prime Day to the main day of Singles Day, well, Alibaba's Singles Day recorded over $40 billion in sales in a day. That's 4 times better than Amazon's $10 billion on Prime Day. Alibaba are having a record year. They are looking at a 50% growth rate for their business, and that is just very impressive. Okay, now there is obviously a little uncertainty in the air. What will the government do to Alibaba? Will it be a bit of a non-event like in the US, or will China make an example and flex their muscles? Look, I don't know the answers to these questions, but I think that Alibaba's business long-term is going to be strong. Maybe a few fines and a few changes that need to be made in the shorter term, but they will cooperate and get back into the swing of things. Based on the record-breaking numbers that we are going to see for 2020, I had brought my buyout to price to $220 a share for Alibaba. Now this includes a reasonable 30% margin of safety from what I think is their fair value. So my long-term outlook on Alibaba hasn't changed, and I think at around $220 is a really good entry point. I'm going to get really aggressive if the price keeps falling and goes to something like $180. So I guess my opinion is this. Alibaba is a great company, having a great year, but is going to go through a period of uncertainty. Uncertainty has created an opportunity to get better prices. Look, maybe this entire thesis falls apart and the government dismantles Alibaba. That would be highly unlikely, but in that event, I just don't want to be personally wiped out. So it's not going to dominate my portfolio. Something that I am preparing is a video on the way to get paid to wait for the prices that we want. Now, Alibaba is going to give us a great opportunity to get paid very well to wait for a great price, like $180 like I want. So let me explain a little bit further. Look, don't be scared by this phrase, but what I'm talking about is called selling put options. If you have no idea what I'm talking about, then that's totally okay. Look, it isn't necessary, but for those experienced investors out there, look, check out the options rates on Alibaba right now for 80 days. Look, all will be revealed in an upcoming video. It is just taking me a while to prepare. So if you are interested, make sure you have subscribed to my channel so you don't miss any of these interesting topics. I hope you feel better about the Alibaba situation now, and I will see you in the next video.